So overall, today, obviously, we had a big bull trend day and we reached the August high. And I want to say one thing. There's always, you know, there can be confusion on the Brooks trading course with the blogs. And by the way, I've got StreamYard, the hosting platform, on the right side of this screen and TradeStation on the other. So that's why you'll see me look in both ways, because I've got to deal with two screens. But first and foremost, this is let me pull up the website. That's the website to the trading course and the blogs. And there's often confusion as far as, typically when I am writing the blogs, I am using, I thought this was fixed on this computer, but let me make some adjustments. When I am writing the blogs, I am basing it on something called, for TradeStation, the @es.d, the day only session. And this does not factor in Globex. But this is a continuous chart. You can see at the top it says continuous. And because of that, it rolls together. It automatically rolls over. But whenever there is a price discrepancy, that's the main thing I want to mention. I always go to the CME website. The CME website, they own the Emini. Therefore, what they say goes. So if you ever have a price discrepancy, you always check the CME website for data. Other than that, the biggest thing today was we tested really close to the high of August on the daily chart yesterday. We came really close right here and we sold off. We came within about 14, maybe 15 points and early yesterday morning and sold off. Let's go back to yesterday, and we can see it right here. So we came really close to it, and which was pretty much right here within about 14 points, and then we sold off pretty drastically. And you could argue, a lot of traders, when they're trading a daily chart, you have to think about test of magnets or support and resistance, as you have to think of them. I'm going to turn off the screen as I'm talking so I can fix one. I want to fix something. I want to add a pointer. But while I'm saying all this, support and resistance, how accurate the test is. Let me pull up the screen one more time. There we go. Here, this test right here, you can get within 10 points, 20 points of the August 2022 high, and that can be a reasonable test. It's often how on a 5-minute chart, when the market gets within, a point of an important magnet, you'll see profit taking or buying. And that's the same thing. The market came really close to this and it sold off. But the channel was tight enough that we had to reach it. Let me just check one thing. So anyways, I will fix all these lines later on. By the way, I also want to mention, let me just pull up a new chart. So I'm going to pull up a new workspace. I want to talk about the euro dollar for a minute. And this is something I'm going to talk more in detail about. But the euro dollar, really fascinating day. Here's the daily chart. What do you notice about the euro dollar? There's this huge bull trend bar today. And if you read the blogs, I've talked about how we had a bear flag, 2 legs up, leg 1, pull back, leg 2. And it's reasonable to think that it's a second entry short, bear channel, probably going to go sideways, get a second leg down. But when you look to the left, you notice that, this is a trading range and there's lows down here. Therefore, if this is a trading range, we have obvious gaps up here. Camera's a little distracting. Whenever you're in a trading range, typically, if you do something reasonable, 80% chance you can avoid a loss. And that means if you're buying here and scaling in lower, 80% chance you can avoid a loss, 60% chance you're going to make money. Someone asked why. Someone asked, why do I prefer non adjusted charts? And another person asked, do they have to buy the course? And you don't have to do anything, but I would, the only thing I would say with that is if you're watching this video, it's probably going to be kind of pointless to listen to me if you haven't really studied how or watched the course. Otherwise, you're just listening to someone talk. But the reason I prefer, so, anyways, let me go back to this first. The reason, whenever traders decide that a magnet is going to get tested, when that decision is made, all of a sudden you can get price can rocket to a magnet. So this is strongly bullish, probably going to get a second leg, but you have to also wonder, it's a climactic rally testing support. Now, we broke above it and we didn't really pull back that much. That makes me think this is a big enough surprise. Maybe we'll test 1.11 and the highs up here. But who knows? Let's see the follow through tomorrow. Big enough buy climax. I suspect probably some profit taking. But anyways, the reason why I wanted to mention this is whenever you're short and you have a channel and then the market starts to go sideways, when everybody agrees that it's in a trading range, you just all of a sudden can get this explosive move. And it can seem really scary and unfair, but it's just computers and institutions agreeing that the price is wrong. Remember, the goal of a market is trading. The market's goal is to force you to trade, transact. If you're trying to buy a house, that's why you want price transparency. You want the market to be fair. You want to be able to buy something and sell something relatively at the same price. And when price discovery needs to happen, the market's going to race up to that fair price. But I thought this was a great example of the market probing and closing a gap. By the way, Forex markets are great things to trade for higher time frames, daily charts, 60-minute, 30-minute charts, 240-minute charts. They have really good swings. And the reason I like Forex markets is, for one, you can trade any position size you can risk. You can have a $20 account and trade a daily chart. You're not going to make anything, but you can practice trading and practice doing the right thing. So if you're long, maybe you have a breakout, 50% pullback, and you're channeling up, strong enough breakout and a pullback, probably going to go sideways, but may get a second leg. Here, you got a big second leg. So let's go back to the E-mini. So as always, the first thing I do, if I don't have lines drawn on a chart, I draw yesterday's high and yesterday's low. Here's yesterday, if I can get TradeStation to cooperate. Yellow circle, this red circle is really distracting, but I know it helps everybody see the mouse, and which is good, but it can be kind of distracting when you click on things. So on the open, the market had a doji, and the most important thing you have to realize is it's in the middle of a range. Now, if you're watching the Globex, and sometimes I'll trade the Globex in the morning. I'm usually up pretty early, so I'll take a look at it. We had something really interesting in the Globex market. And by the way, somebody asked why I don't look at, let me look up the question. Someone asked, why do you prefer non-adjusting charts? And I'm assuming you mean, why don't I just trade the Globex chart? And I will look at the Globex chart pretty regularly, and I'll trade it at times. I like the E-mini because it's similar to the SPY. It's kind of like trading the New York Stock Exchange or the NASDAQ. There's 81 bars to the chart. There's a clear open. So it's kind of like, if I'm in Central Time, so 8:30 a.m., the market opens and, it's time to watch the market. The Globex chart, if I was trading, if I'm holding a trade overnight, or if I was going to trade if I was just going to trade a chart and be willing to hold overnight, I'm going to trade the Globex market. So But anyways, back to the Globex. One way it could help is whenever you get a gap or you get a rally on the open, 50% chance it is a vacuum test of support or resistance and the move fails. Now, if you look at Globex, you can often get some insight to this move right here. On the daily chart, on the blog, I mentioned how, if I can get over there, I mentioned how we had a doji here and I thought we would get another day of profit taking. But when I was writing the blog, this was the report bar at 7:30 Central Time, we had this bear breakout and a pretty strong rally. And if you look, we've been channeling down for a lot of bars. We had an exhaustive sell climax, best looking bear bar of a sell off. So reasonable to assume we're going to test up here, the high, this lower high. And when you look at this rally, I look at this chart, I think, yeah, that's a pretty big rally. That's pretty strong. We're probably always in long and we're probably going to get a second leg up. Now, what we don't know is, are we going to get a pullback all the way down here and then a second leg, or are we going to get a measured move? So for those of you that are in the video course, if you're watching the breakout section, Al says, would you rather sell this and put a stop up here and target down here, or would you rather buy, put a target up here, stop down there? Obviously, we know the answer. We would rather buy, put a target up here. But when you see this context going into the open, you know that there's potential for a trend or a rally lasting a few hours. So at this point, when it's pretty much 8:15 Central Time, the market's going to open in about 10 or 15 minutes. The one thing I'm thinking is it's probably going to be a bullish open or a trading range and not a strong bear trend. Let me get a sip of water. So because of that, I will use the open or the Globex to sometimes get an idea of what the day is doing. And actually today I traded more of the Globex. I was watching already. So I was kind of already in the mode of trading the Globex chart. So I really just kind of continued to trade it. And if I'm ever trading, I'll typically wait. I want to see a breakout. I want to see the opening bars and just in case there's a surprise. So I hope that's helpful about giving a little insight to the session of the open. So, anyways, bar one, as we all know, 20% chance it's the high or the low of the day. And the reason for that is 20% of the time you get a trend from the open, 80% of the time you get a trading range. So most traders should wait 6 to 12 bars. Bar two, strong bull bar, possible trap for the bulls, forcing bulls to buy high in what could be a trading range. But when I look at bar two, if I'm a seller above one, I'm probably trapped on two. So if three is follow through, then bulls are trapped. And we have 3 consecutive bull bars. At this point, it's probably always in long, probably buy the close, stop down here, still buy the close. And this is pretty strong. You can argue it's exhaustive and it's probably going to stall and go sideways. But the reality is, if you're buying up here, the best the bears can probably expect is sideways. Plus, you have an obvious magnet around 44.55, the August high. And again, I don't remember the exact high. I can look over here and tell you it is 54 even. So you know that there's a logical target up above. Inside bar on 6, in general, sellers above high ones. An inside bar is always a high one or a low one. And it's a triangle in a smaller time frame. Generally, it leads to sellers above and sideways and then trend resumption. But in a strong breakout, like we've had on 2 through 5, this high one, there might be more there might be more buyers above the high one than sellers. So there's no way I'm selling above the bar. The only question is, am I buying above it or trying to buy a pullback? and we got followed through. But you can see the market pulled back a little bit. Here, you can see some traders bought above, more bought the retest over here. I talk a lot, more about that in the trading room pretty regularly. But if you sold here and you were disappointed here, what are you going to do on a retest? You're going to exit. 9, we have a lot of consecutive bull bars, 9-bar bull micro channel, still probably buyers below here. And you can see 3 bars down, sellers above, but at best for a scalp. At this point, this rally is so strong, you can argue it's 2 legs up. Leg 1, deep pullback, maybe leg 2 up to this area. But the reality is probably sideways at best for the bears, which means we're either in a bull trend or a trading range. 12, bull close, breaking out above the high of the day and closing above the high of the day. Good for the bulls, probably going to go a little bit higher. We may have to pull back and test the moving average, but the reality is if you're buying anywhere and scaling in, you're going to make money. Traders will see this as a bull trend. Therefore, what do you think they're going to do if we fall below that red line? They're going to buy. Breakout, follow through. Is it always in short? No, it's a trading range day. Trading range days, traders are looking at this and saying, wow, what a gift. We've been going up for almost the whole day for the first 12 bars, sideways here, finally letting me buy a pullback. This looks like a good buy. But when you look to the left, it's just a retest of 68. So if anything, consecutive bear bars, 13, 14, probably sellers above for a second leg down. But the reality is you'll have bulls who are buy the closed bulls, and they'll look at this bar and just say, yeah, if I buy it, I can probably make 4 points before I lose that much. And then there you go. But strong enough bear bars, probably a second leg down. And you can see the bears that sold here, scaled in, they're disappointed and they're trapped. They were hoping for a second leg. They didn't get it. And that's why this bar happened right here. Bear bar, we're leaving the bears who took a bad sell. Bulls know that. They'll buy. And you can see we channeled up. Now, whenever you see a rally like this, it's always reasonable to assume that you're going to get some sort of measured move. So look at that. Decent breakout here. Started to go sideways. So probably a measured move from the open to the high. So some traders, this is why I recommend trading the SPY so much. Traders just buy the close, take partial profits, take more, take the rest off, or take 25% off here, 25% here, another 25% here, and then swing the balance. Traders do that all the time. That's why it's so important to be able to trade small. Other traders, they'll buy, and if they're willing to more micromanage trades, they'll start buying below bars and scalping. So always in long. 24, a little bit climactic, parabolic move, so may pull back for a few bars. What about selling the close of 24? No way. If anything, I'm looking to buy and buy pullbacks, but at this point, I really want to see a test of the moving average. Second entry short, big bear bar. Is this gonna crash and test down in the bottom of the channel? No. Why? Because we have a trend line, and this is a very tight channel, and this is the break of the channel, which means bulls were buying. They scale in lower, such as 28. What are they going to do on a retest? They're probably going to exit. But they know the reason traders buy breakouts is because they know they can buy all the way up and buy lower and make money. I can buy this close, and if we get a big bear bar, I'll buy more, and I'll get out of my break even at my first entry with profit on the second, or maybe I get out break even on the entire trade. A bull bar on 29, high one buy, but probably sellers above after these 2 bars, but high one type bull channel. We could easily go above the breakout. So bulls will buy above this and lower. Why didn't I use the bodies? Because it's the first reasonable target, the bodies of the bar. But I can also use the extreme, and we'll probably get there. And you can see we eventually got there. And really, we probably reached all the way up here. And you can see we got there as well. And we ended up getting, there you go. So here was the breakout point. Here was the retest. So this line, we had a breakout point. We tried to retest it. A measured move from bar 1 to 21 is 85.25. The high of this bar is 85.50. So for those of you that want to say that, markets are, the E-mini in particular, people will argue that the E-mini is very precise, and this is a great example. I'll go back to where I was, but you had a channel, and you had a spike, pullback, we're channeling up. Channels typically evolve into trading ranges, and instead, what happened here? We got an upside breakout of a channel, and some traders will look at it and say, maybe it started here. And you can see we tested the breakout point here from this high to this low, and it's subjective. Some traders would say it's here. Some traders would say it's the measured move from here, but the market closed below that price level. So then maybe they'll say, okay, maybe it's the low of this bar, which is basically the high here. And you can see there's the target. But anyways, back to where we were. Sellers above, so not really a great buy. We got a second leg down, but it's trading range or a bull trend, so bulls will buy. And we went sideways to the moving average. We had a triangle here. If you read the blog and you read the update, I mentioned we had a strong bull trend from the open and that the bears needed to make the market go sideways for a lot of bars. I said they needed to break the trend line. And that trend line constantly gets broken. Here's a trend line. Here's a trend line. And eventually, the market goes sideways for a lot of bars, maybe 20 bars or 15 bars in here. And that's good for the bears. But a good measurement of strength is breaking below the moving average. So we have a bear bar below the moving average. Great for the bears. But let's see follow through. I want to see a strong breakout and then show me a retest of the highs and show me a weak retest, and then maybe I'll be convinced to sell. We had a trend line break here, but it's probably minor, and it leads to a retest and then a second leg down. So this is all in the video course. You have a trend line break, disappointed bulls. I mentioned they may sell up here. They start selling, and then we get a second leg down. Now we have a bigger trend line break, so even more disappointed bulls. But this is probably not the start of a strong trend. This is probably the start of a trading range. And you can see it's testing the lows over here. So what happened? We tried to become always in short. We have a close below the moving average. It's 20 gap bar sell. 20 gap bar buy. And we got a surprise bar, and then we led to a new high. And we pretty much drifted up for the remainder of the day and then sold off somewhat late in the day. Whenever you get this much buying pressure, you just know almost every time you see there's going to be an end of day sell off, and that's usually profit taking. And the reason is most bars don't close on their highs. So overall, always in day was always in long, buy below bars, buy bull closes, scaling lower. The single most important thing is when you see a rally like this, just buy something, buy small, buy pullbacks. And most traders trade too large. They're too uncomfortable with being able to just buy and buy more lower. And a way you resolve that is you trade small. You have to trade the I don't care size. This bar is pretty big on the daily chart, and it's climactic. So that makes me think we're probably going to go sideways here and probably not go straight down. For always in, I've already talked about that. It's always in long. There's some places where traders get out like below 13, but they buy again here. You can get out below 27. Maybe you buy 29, but probably a second leg down. So probably better to buy 34. You can get out below 43, betting on a triangle, but not really ideal. And then you have to buy again above 46 or 47, 48, anywhere in here. Type bull channel, maybe a parabolic wedge, 1, 2, 3, but not great shape. Some traders get out below 55, but if they did, they'd probably have to buy again above 59, and no reason to really get out in here. You can get out below this bar, betting on another parabolic wedge, hard to see, but one, two, maybe three, or one, two, three. It's not really a great shape. And when it's not a great shape, it's probably going to be minor. Most parabolic wedges are minor already. And then I think most traders should just stop trading in here, especially always in. For stop entries, I thought the best stop entry, I think it's reasonable to buy above 15. 2 legs down, trapping the bears into a bad sell. Probably okay buy for a swing. So buy above it, stop below, and hold for 2 legs. You can buy above any of these bars. If you're willing to trade small, you can buy here and buy the close after buy this close. What traders do is they pick a bar. Let's say they bought this close right here and they set a target here, 1 times the range of the bars or the bodies. Then you get another close and they say, well, maybe there's a 60% chance we'll get up here. I'm going to extend my target. And then here they'll say, well, maybe there's a 60% chance we're going up here. So they bought here in the middle, but the target is up here. So technically their target is more than 1.5 times their risk. But going back to the open, if you want to get a better idea of how to read breakouts on the open, you can refer to the Globex session. So if you see a bottoming, if you see an attempt where the market's trying to bottom, like down here, it increases the chances that any rally on the open is a breakout and not exhaustion. Let me show some examples really quick. By the way, feel free to ask questions. I'm going to try to answer as many questions as I can, but I typically am able to answer more questions during the trading room session because that is just more, it's longer. So give me 1 second here. I want to look up. I've got a collection of, I'm trying to build my own kind of version of examples of charts. I'm going to pull that up really quick. Let's see here. Give me just 1 second. So here's an example. Oh, this was from, I forget which day this was. It was April 14th, 2023. And we had this big rally in an immediate sell-off. And if you look at that immediate sell-off on the Globex chart, it was 2 legs up. We rallied and had this violent breakout on the open in a second leg. And it's basically a lot of trading range price action. We had a rally, deep sell-off, and then another rally. So this bull breakout is more likely exhaustion than the start of a strong rally. Here, you can see here is Globex, and I just named them. Globex can determine probability. So here we gapped up on this bar, but you can see this was just a report bar. We had a strong rally and then basically an endless pullback. So when you see this right here, you think to yourself, this is fairly disappointing. Here's a good example. This was that 24 bars down we had a few months ago, 24 bear bars in a row. And you can see on the Globex chart, we were in a very tight trading range. This is a 15-minute chart of the Globex session. And there's the first 5 bars, the first 3 bars of the day, breaking below a lot of bars on the Globex session. So here, these 3 bars, they did something important. They closed below a lot of prices, and that increases the probability of lower prices. Here, this was that day where we had a big sell-off and then a strong rally, probably buyers below, but the bulls failed and we got a strong second leg down. Anyways, the reason that's important is Look at the Globex chart. This was a report. So we had a strong rally, 2 bull bars, and then it was exhaustion. And we had a strong bear breakout and a second leg testing the bottom of the gap. So back to buy the close, sell the close, buy the close all through here. Really, you could buy the close of anything, buy any bear bars, probably going to get a second leg up. Some traders will look at this like leg one here, pull back to here, leg two, and buy the close all through here. Limit orders, you can buy below anything and scale in. Let me look at some questions and then we're going to wrap this up. And remember, if you want to ask more questions, the easiest way is in the trading room. Let me give there is the link to go to the Brooks. You go to brookspriceaction.com. You have to register, and then there's information on how to sign up for the trading room. There's a free trial, and then obviously you can follow steps to decide what you want to do. But I'm going to leave that up for a second while I pull up some of the questions. Today I bought above 3 and exited when we touched the 23 close from yesterday. I bought above 3, that's good. And they exited when we touched the 23 close yesterday. That's probably reasonable. I mean, you bought, you had good risk reward, so that's good. Was there really a reason to exit until 27? You don't have to, but I think it's good practice to exit. When you take partial profits, there's certainly nothing wrong with that. Someone asked, can someone tell me where I can learn the information that's taught here? And someone replied, brookstradingcourse.com. I mentioned the measuring gap a little bit earlier from the low down here to the high, I believe bar 21. This low to pretty much that high, which came within 1 tick of this measured move target. I'm glad that is helping everybody. Thank you for the compliment. Someone says today this was climactic, but kept rallying. Was it the gaps being open and trapped bears? Yeah, there's a couple reasons there. What you have to look at is the higher time frames can help you decide what's going on. But the reality is when you see bull bars like this, you just buy. And it's going higher until it's not going to go higher. And sure, you can look at when in doubt, just look at the Globex. The most important thing is the recent price action. So for me, because I was trading, like I said, I was trading some of the Globex early this morning before the market opened, before the US open. I often just have a 15-minute chart of the Globex session. So when I see this big sell-off, test of these lower prices, I know that the bears who sold down here, scaled in, are trapped. They'll probably buy back shorts. Then we have this explosive move. There's probably going to be a second leg. Therefore, it's probably not going to end, and we could easily test up here. Plus, on the daily chart, we know we have the August high as a magnet. Someone says, in my honest opinion, the course is easier to learn from. Yeah, I think the video course is easier for most traders. I've got the video course. I've got the books. I read the books all the time, and I'm trying to go back and read like a chapter a day or chapter every other day, just because I really enjoy the books. But if you're starting out, I would highly recommend the videos because they're going to be easier to grasp. It's going to be easier listening. I didn't make the videos, obviously Al did, but it's going to be easier, as an example, listening to me talk about the day than reading someone explain the day. So It's going to be easier listening to Al explain the video course than reading a book he wrote. But the books are great supplements. And honestly, people say, do you need the Forex course? Should you just get the regular course? And I have both just because instead of 100 videos, there's an extra, I don't know, 20 videos, 30 videos over Forex. So it's just more examples. Let's see here. Someone says all the information is very exhaustive. It is. And I've been watching Al and studying him for pretty much 10 years. But I can promise you every year that I study Al is another year it gets easier. So, last little bit of questions. Bar 68 appeared climactic. So this area appeared climactic. Bar 69 was a deep pullback. Yes. Would your stop have been under 66? No. For me, tight bull channel, if I'm not, I could understand getting out here, but the reality is you're probably going to get a bounce because the bulls that bought scaled in. They're probably going to get out break even. So for me, I'm probably just going to exit. If I bought and scaled in, I'm going to get out. I don't want to see this kind of a pullback. Plus, I'd be really hesitant to be buying up here anyway. We have a buy climax and then a hesitation and then a bigger buy climax with weak follow through. And just look how far the day's gone. We've gone up 4407 to 4484. So what is that? 80, almost 80 points in one day. That's a really big move. If I didn't get out on the pullback, I'd probably get out below this bar. Can you talk about managing profits on the way up and were there deep pullbacks throughout the day? And is it a good example of profiting from always in? Yeah. If you're an always in trader and you just held till the end of the day, you did really well. But most days don't do this. Therefore, most traders, if they buy, go back to Al's books when he talks about stocks. He talks about buying anywhere, take, half off at 25, another half off at 25. So let's just make an easy example. You get a breakout, you buy that close, you buy small so you can put a stop down here and you don't panic. You trade stocks, you get out one times a measured move up. Then you get out, maybe you get out 25% here. Then you get out another, maybe you get out 50% here. And then you swing 25% into the close. There's several ways to go about it. Easiest way is take profits along the way. Okay, question about bar 46. Here, when I see 46, I wait for a high 2 that never comes, and then I miss the bull trade. Yeah, that's because this is a sell climax, and it's a vacuum test of support. And I know what you're thinking. You're thinking 3 big bear bars, sellers above. That's a bad, that's basically a bad high 1, and therefore it's probably going to trigger and fail. But what is a high 1? A high 1's a pullback. Here's a high 1. We went above, pulled back. And most high 1s, this high 1 right here, high 1 is just the first pullback. Bar 6 is the exception to most high 1s. Most high 1s don't go straight up. Most high 1s hesitate. High 1 went up, reversed, and then went higher. High 1 never triggered. Maybe this is the high 1, but that's a reversal. High 1 went way, much further down. Here's a high 1, went up, pulled back. Low 1 went lower, but reversed. So the point I'm making is if you see this, if your expectation, think about your expectation. You said you were looking for a second entry, but look at your entry bar. Look at 48.7. It's a big bull bar. If you're a bear, if you took the opposite side of the trade and you sold here, and then you see this bar, what are you thinking? You're disappointed. And if you're disappointed, you're probably going to exit. I'm always thinking about the other side of the trade. Great question. Have you ever had problems? Ever had problems getting into a trade, fearing not losing money, but being wrong about your reading? Of course. I can trade the I don't care size, but even then, I get out too quickly, out of good trades, and because of that, something. Yeah, that's why I recommend trade always in. Trade something like Forex or the SPY. I say the SPY, any stock. The SPY mimics the S&P, so that's a great option. But you buy anywhere in here, put your stop down here, take partial profits along the way. And a lot of traders, if they're trading always in, some traders they take half off as it goes up. They take portions on the way up, and when it pulls back, they buy again. But the key is, how do you get good at anything? You force yourself to sit through trades. People always say, "Oh, I'm just not a swing trader. I can't be a swing trader, therefore I'm a scalper." I think that's lazy, and it's not a dig at anybody. I just think that that's like saying, I'm not a runner, therefore I don't run. Well, if you don't run, that's by choice. And if you want to get better at running or swing trading, you have to practice either one. And then you start to learn. For me, I think always ends the best way to trade because it's the best way to learn how the market operates. If you can't swing trade, you're probably going to have a lot of difficulty scalping. You really need to understand swing trading in order to scalp. Why? Because if you don't understand swing trading and you don't understand what the swing traders are doing all through here, you're going to end up picking tops all the way up and you're going to lose a lot of money. All right. I'm going to answer maybe one more question. Besides measured moves, do you set any other type of stop loss? The longer you trade, the more you use wider stops. On a day like today, you have a lot of flexibility with wide stops because it's either going to convert into a trading range or remain a bull trend. So if you're buying on the way up and you scale in, you're probably going to make money. Bull bar, if you buy more lower, you're going to make money. Even if you buy the high tick up here, you can get out, but if you do, it's probably limited. So the reality is anybody that buys and scales in still probably going to make money. And I try and talk again, some of these are easier to explain real time during the day. Sometimes the low two is formed after a big bull bar in a bear trend. It's very hard to trade them, but they give good risk reward. What's your approach? And should I short every low two in a bear trend, no matter how it looks? Well, that depends. It depends on the leg count. Let's go back to the euro dollar. Here's a great looking low two, big following a big bull bar and a bear bar closing on its low. If you sold it, it triggered. You had bad follow through, more bad follow through, further bad follow through. Then you had this. And it really depends on the count of the leg. Here's a low one, but it's strong, following a strong bear breakout. So there's probably sellers. There might be buyers below for a scalp, but it's limited. Therefore, there's probably sellers below. So to answer your question, it depends on how extreme the move is. The further down a move goes, the greater the need of a pullback. That's why low ones at the late in a move begin to fail. All right, so it looks like that is all the questions I've got time for. As always, I appreciate everybody watching this, and I'm glad to know they're helpful. And the reminder, there will be no end of day video review tomorrow on YouTube. If you're in the trading room, there will be an end of day review. So if you're a subscriber to the trading room, which again, we know that that's right here, brookspriceaction.com, you can subscribe to it and listen to the end of day review and get all the recordings from the end of the month. All right. We'll see what happens tomorrow. Tomorrow we may pull back. We had a really big bar today and it's a little bit climactic. So probably going to pull back for, at least a day or two. And we're at a logical target. All right. Hope everyone has a good rest of their day.